What's up, YouTube? The John Vandivier here. Today I'm doing the update that I promised y'all on that prediction that I made before. Well, when I made that prediction, we were up here, right? And I had said that this spike was completely artificial and it was a psychological mania. It was a bunch of people investing in the euro because they thought that the injection of cash that the banks around the world provided, the injection of liquidity, especially the United States, towards Europe, would, in the long run, lead to a recovery. So this was a knee-jerk reaction, but we were up here in the middle of it, and I said this isn't going to last. It's going to correct. And that was because the fundamental fact that the way it affected the fundamentals was to reduce the power of the euro because it was an injection of U.S. cash. U.S. cash is worth less than the euro at the time. So if you inject a currency that's worth less, then the currency that's already there is going to be devalued as well. Now, don't get me wrong. It's not like Europeans are using dollars. That's not what I'm saying. What I'm saying is the makeup of the financial system took U.S. currency, if you understand what I'm saying there. Okay, so it devalued the dollar. Not to mention the fact that it devalued the euro, I should say. Not to mention the fact that they even needed the injection is really an indicator of the productivity slows and real financial troubles that they were masking with that injection of liquidity. So it goes up, and up here I'm saying it's going to go down to 133, I think I said. Well, you can see that I made that call, what was that, somewhere around December 1st, somewhere. And right around, let's see, right around December 10th, it looks like, it hit 133, and then it just kept going, and the bottom fell through. Now, you should notice, I'm going to go ahead and talk about this. Not all traders trade the news, but the news always affects the trader. And so this is not all a result of the single event that I was talking about. There's a constant stream of news, and I'll just show you on my dashboard. You can see there's a constant stream of news that's being updated multiple times a day, even multiple times an hour. So this is what good traders do. We don't always trade the news, but we at least keep up on it because it does affect us. And let me just tell you a piece of news that it's trying to correct right here, but I'm going to go ahead and I'll zoom into the 15 and show you this. It bottomed out the drop and it's trying to go back up, but I'm going to tell you right now, and I'm going to correctly predict again because it's what I do. I just correctly predict stuff. This correction is going to fail. And why is this correction going to fail? No, it's not because of technical analysis. I'm not doing regressions on the waveforms and a bunch of useless stuff like that. I'm just keeping up with the fundamentals. I'm aware of the news, okay? So let me take you over to Vandivier Bank. This is one major source I get my news from. And you can see the euro bounced from lows. So in other words, he's saying that it's trying to recover. But here's the actual economic news. Check it out. Jobless claims in the U.S. dropped to record lows for 3.5 years, so that's good for the dollar. So all other things held constant. If the euro is constant and the dollar goes up, that's going to decrease the euro relative to the dollar, right? Okay, so the dollar's going up, but not only is the dollar going up, Bernanke is saying he's not going to help out the Europeans, and the Europeans, according to Bloomberg, may slip back into a recession. Now, we need to take two things into account. Number one, it doesn't matter if they slip back into a recession. The mere fact that Bloomberg said they might slip back into a recession is going to cause a fundamental expectation shift in the market. And remember, the short term is determined by expectations. Now, that said, if it does slip back into a recession, then the expectations are also going to be bad. So either way, this news right here, Bloomberg and Reuters that are talking about the European area and Bernanke, this is all bad news for the euro. And then again, if the dollar stays constant and the euro decreases, the dollar is going to appreciate relative to the euro. Now, if we combine these, the fact that the dollar is going to appreciate and the fact that the euro is going to depreciate, we actually get a double effect. And combining for the psychological effect of overshooting, which I covered in the last video, this thing is just it's gonna drop, man. We're at 13031. I hate to make finite predictions because, you know, I can predict the trend easily, but predicting the finite numbers gets really difficult. But I'm going to say that because this news is relatively new, that it's not accurately reflected in the market. So I'm going to say that it's going to drop lower than any of the numbers were today. So we can look at the 12945, and I'm going to predict that it's going to drop below 12945 right here. And I'm going to say that let's go ahead and give it a month to do that. Let's give it a month to drop below 12945. So I'll check in and update you on that. Take care, YouTube.